TheoTrade, this is Don Kaufman. It's August 7th, 2019, and you are watching the TheoTrade evening video. There's 10 minutes left to play in the trading period. The S&Ps, well, for right now, they're up 5, but people, it's all about the volatility. It's all about the range. I mean, hey, just freeze the screen for a second over here. Take a quick glance from the S&Ps from the low to the high today. Oh, I don't know. What's 70 points amongst friends? 70 S&P handles. Again, another wicked day inside of the S&Ps. The irony of all of this is that the S&Ps are going to close massively unchanged. I mean, listen, a 5-point move is nothing in comparison to, again, some of that wild range that we've effectively seen throughout the course of, well, the last couple of trading sessions. Now, before I get into some very specific trades, and we intend to do just that, some very specific trades. Before we do that, let's give you just a quick kind of rundown on a few things that I think are really, in play right now. Number one, if you haven't looked at the bonds, all right, yeah, I can see that the bonds, they faded as today went on. Again, it's here on a Wednesday. We faded a little bit in the bonds. Nevertheless, if you actually bring up the bonds on a daily chart, people, that is the definition for a parabolic move to the upside. Interest rates are just collapsing everywhere. The yield curve is wildly inverted. I mean, the only way to call this is that's a full-on rates kind of crash to the downside. Yeah, there's a little reactionary bounce, which actually is going to bring me to my my point of today's discussion. We're going to actually look at some bounce and fade trades in just a moment. Now, because the bonds are rocking to the upside, it is gutting the financials. Now, for those of you that have tuned into any number of the videos that we've done recently, I've been most critical of the financials and the entire financial sector. In fact, that's where I kind of house some of my largest positions right now, of course, is inevitably inside of the financials. The financials are sitting right on, what we've termed over months and months of time. This is kind of the Maginot line, if you will, of the entire market, not just the financials. It's 26.50 inside of the XLF, right? We're a hair above it. We're 25 cents above it right now, and the financials are bidding back up. Nevertheless, the reason I point out this 26.50 level inside of the financials, that's not just for the financials, Under 26.50 is effectively bearish, for the entire marketplace. And that's one of the things that I kind of want to stress, moving forward here is, we're seeing some fairly wild volatility. I mean, the VIX today, all right, it even fell under the 20 level. But as we know, the volatility at the VIX itself hasn't really come to life yet. I mean, you look at like the VIX at 20, the thing is just catching its stride. Let's just recognize for a second what we've seen in just the last, 24, maybe 48 hours of trade. You realize you have three central banks around the world that have actually cut rates. Whether you look at Thailand, whether you look at New Zealand, whether you look at India, they're cutting rates. You think they're doing that because everything's happy-go-lucky and the marketplace isn't reacting well to the central banks. What you're seeing on a broader scale right now is the marketplace may very well be turning its back on central bankers. It's a lot to think about. So getting down to it, what we're going to look at, because we've got some, good volatility right now. And again, as I've mentioned, I just don't think the VIX is necessarily taken off to the upside. That entails me not wanting to go out per se and sell premium. Yes, there's some instances of like, wow, I'd really like to go out and sell a little premium here or there. But that's on a very, very minute scale. Net, I'm looking for what I kind of term bounce and fade trades. What does that really mean? All right, let me give you guys a quick idea. All right, one of the things I'll bring up first is Intel. Intel. This is an underlying that we've got, 1, 2, 3, 4, 5, 6, 7 days in a row that we're down. 7 days in a row that we're down. What are you anticipating here? Eventually it's going to get a little bit of a bid under it. You can effectively see that Intel, it is catching a little bit of a bid in just the short duration here. I'm actually going to show you a spread momentarily, but when I say it's catching a little bit of a bid, is that after this many down days, you would expect a little bit of a pop to the upside inside of Intel. Now, what we're doing here, it's not just about the Intel trade. Okay, again, I want to reiterate this. It's not just about the Intel trade. I'm actually going to put on a number of in-out spreads on a couple of different underlyings and play what I term kind of the bounce and fade game in here. That is, listen, the marketplace is fluctuating around all over the place. Okay, Intel has been whacked back a little bit. We have anticipation that it's likely to bounce up. Okay, we're going to go after that in a short duration 16-day trade. Now, that 16-day trade, I'm buying the 46s. I'm going to buy the 46s. I'm going to sell the 48s. Okay, this trade should be right around $1.02. Effectively, I'm risking a buck to try to make about 55% on here. And anytime in the next 16 days, if we get a little bit of a bounce inside of Intel, this thing's going to work out. Now, that's looking for a bounce trade. Great, that's Intel. What's a little bit of a fade trade? A fade trade might be looking something like Microsoft, right? Why did we go to Microsoft? Well, because Microsoft is unscathed. I mean, effectively, it got whacked down. It's bounced back up a little bit. Microsoft's actually going to close up on the day. But in Microsoft, I'm going to look for the opposite. In Microsoft, I can go a little bit further out in time and stage, again, an in-out spread that's going to effectively be a little bit, just a hair, okay, bearish in this case. Now, there are times when you're going to have to price a multitude of strategies, okay? But in this case, I'm looking at a 137, 135 put spread. Again, a 137, 135 put spread 23 days out, okay? Work your orders, people. Work your orders. I'll come up to just a few pennies north of that. Just cancel, replace the order, okay? So, we have a little bit of a bounce trade in Intel, okay? A little bit of a fade trade inside of Microsoft. Again, that's effectively working both sides of the equation inside of relatively similar sector. Okay, moving on from there, got to take a look at Netflix. Now, Netflix, this thing has just been absolutely hideous since earnings. Now, this is not exactly an easy product to go run out and trade. Netflix is a $300 behemoth with over 40% implied volatility. Here, I'm going to be looking for a little bit of a bounce trade. Now, what's difficult inside of Netflix, it's a $304 product. It is moving, people. Okay, this thing is on the move and on the move always in a big way. And the skew sometimes is going to make it very, very difficult to jump on a trade. Listen, it's a $2.50 wide spread. I would not pay more than about $1.25 for this particular spread. So what I typically do is I just route my order. Okay, now I know I've only got a minute left in the trading day, but I'll route my order somewhere around like that $1.25, let fly. All right, there's another bounce trade. Okay, looking again, another bounce trade. Take a look at Caterpillar. All right, Caterpillar. Stock's down again today, nevertheless. All right, after getting absolutely slaughtered. I mean, look at this thing on a percentage basis. Just recently, it was up almost 7%. Now it's effectively down 4%. Now you're looking at a like 11 to 12% slide. What do? We look for a bit of a bounce trade. Now I've already got a number of positions on inside of Caterpillar. Check. There's no earnings out there. Fine. Go out anywhere from 16 to 23 days. How do you execute into something like this? Okay. Again, bounce and fade trades. I don't want to pay $1.08 for this particular spread. So again, I'm going to be very, very patient, okay, in being able to place this. I'll route the order to $1.05, sit tight and see if I can't get on this, okay, inside of the next 24 hours of trade. All right, last but not least, we bring up Costco. Costco for a fade trade. Costco, look how wild the move is back to the upside over here. Some of the consumer staples ripping, people, just absolutely ripping with 22 seconds left. Okay, this becomes a fade trade. Again, I go after in-out spreads. We're going to get some in-out spreads working right now because that's what volatility affords us the ability to do. Thanks, everybody, for joining us here at TheoTrade. I will be executing these and many more spreads in the TheoTrade chat room tomorrow morning. Have a good evening. Bye-bye.